All right, y'all, weekend's over. Back to work we go. Got a big money-making week ahead of us, and markets are range-bound. Head of big news tomorrow morning. You know, ranges, they like to rotate from top to bottom, and there's easy money to make by trapping traders on the wrong side of the 21 EMA. I want to talk about that in tonight's video because I can see a number of 21 EMA traps in and around some major news coming out tomorrow. So we'll cover the entire game plan tonight. We'll make sure that you have a roadmap to make some money tomorrow as well. So charts are ready. Enough of the intro as always. Thanks for tuning in. Welcome back to our YouTube channel. Let's go make some money here this week. Get some big news coming tomorrow. Charts are ready to go tonight though. S&P SPY ready to go tonight. Nasdaq triple Qs are ready, aren't they? I've got 5 clues right now on these charts that are telling me where I think the money is made tomorrow. The first of 5 clues is right here on the hourly chart. I like to use the hourly time frame as a directional filter, and it's very easy to see right now that strong run higher. The buyers are in full control of momentum. That's our direction filter for tomorrow. The second clue is over on the calendar for tomorrow. You wouldn't know it by looking at most econ calendars tomorrow. It looks like there's no major news tomorrow, but there is though. Tomorrow, we're going to hear from the Bureau of Labor Statistics, the BLS, tomorrow at 10 a.m. Eastern Time. Around 10 a.m., the BLS will report their annual jobs revisions. Now, this happened last year too. That big, almost 800,000 jobs got wiped off the rolls this time last year. When that number comes out, we expect to get some volatility. Keep your eyes on the time tomorrow. That Bureau of Labor Statistics, their annual revisions coming out tomorrow, and we'll see just how inaccurate those jobs reports have been over the past 12 months. Back to our charts though, the money is made on the charts. We talk about 2 out of 5 clues right now. Let's now dive into some tick charts right now. I like to use the hourly chart as a directional filter, but the money is made on the tick charts. And by the way, if you're watching for the first time right now, all the time frames you'll need are in the upper left-hand corner. And that yellow line right there, that is the only indicator we need to make money consistently. It is the 21 EMA. I see 3 more clues on these tick charts. First clue, we had a big move up and then a big move all the way back down again. Now, why would that be a big clue? Well, because anytime we see a big move up, we know buyers are trying to retest that high. Anytime we see a big move down, it's almost like a bullseye, right? Sellers are trying to retest that low. And because we have that big BLS report tomorrow morning, I'll bet both of these levels could easily be in play for Tuesday morning. The second clue here on these tick charts is this beautiful range breakout. Late in the day on Friday, last Friday, we saw it pop up into a trading range, and we know that anytime we see a range breakout, it's not an if, it's a when. We know the breakout pullback zone is a red hot area. I would love to look for some buys off that breakout pullback zone. And don't you worry, we'll grab the Nasdaq in a moment. The Nasdaq is very similar. And the third and final clue is this range right here. Now, why is that range important? Well, because remind me again, what do ranges like to do? They like to rotate, right? They go up, down, up, down, up, down, and they rotate up off of that low. Now, we're an overall bullish market. On the higher time frame, we have that big bullseye up around those all-time highs. So it is very likely right now that we rotate off this low and break out. Now, there are 3 different types of entry tactics I can use, all using the 21 EMA if we get that breakout going higher. We'll talk about that first tonight. But you know, with that BLS report tomorrow, we better be ready for a strong run down. In fact, I have 4 different trades, all using that 21 EMA, if that number tomorrow morning comes out and spooks this thing running lower. So we have a very important video ahead of us here right now. Let's start first though, if price goes higher, because again, we're ranging, we're rotating off the low of that range. We should be trying to punch our ticket and go out and take out those all-time highs. But how do we trade that? Now, first things first, one of the easiest clues in using the 21 EMA for a breakout is separation. So as we start rotating going higher here, think about shallow pullbacks, new higher highs that separate off the moving average. See, a lot of times you're not going to get separation away from the moving average. So if we see that pullback and that pullback doesn't pull back all the way to that 21 EMA, we call that separation in our trade room, and separation, it means strength. That leads us now into our first potential trade going higher here. It is a separation trade. Separation of the moving average, higher high in price, a pullback right below that low, and the key to the entry on this is a strong green candle closing back above that 21 EMA. Now, remind me again, guys, what happens after a separation trade? Well, first of all, anytime we see a range breakout, we now know that the size of that breakout leg can be used as a measuring leg, and that will be my target going higher here. I don't know exactly where that target will be yet, but that's the formula I'll be using on it. Now, one of my favorite ways to trade a range breakout like this is a classic breakout pullback. Now, a breakout pullback is simple. Once we complete that measured move up here, we take our profit and we start looking for what is basically a two-legged pullback. One leg, two leg. Imagine a two-legged pullback that goes a bit more than an ABCD, right? 110, 120, 135%. Now the goal on this will be to use what was resistance at the top of that range and to use that now as a key area of support. Now, this is where that 21 EMA comes in handy. Because let's face it, guys, I don't know how far that pullback will go. I don't have a crystal ball. What I do know, though, is that when this thing pulls back like this, it's going to feel like a reversal, which is exactly what I want to see, because we know it's not a reversal. We're bullish overall on the hourly time frame. We know that ranges, they love to break out pullbacks. So here's how I use a 21 EMA to time the entry on this. Let the bears come back and let them try once. Let them try twice. Now, once I get the bears trying twice, now I know exactly where their stops are, and I can literally buy right into their stops for a run going back up to retest that recent high. Now, if we're lucky on this, we'll get a bear trap below that 21 EMA, and we'll string together another one of these. Well, in this case, it would be an add-on entry with separation. So on the way back up to retest the high now, we then look for that separation off that moving average, that higher high in price, and we're adding to our winner. So one of three ways I'm looking to trade a move going higher tomorrow is a separation trade away from that moving average, a breakout pullback trade, which is basically a two-try bear trap into an add-on and running going higher. Now, that's one of three trades going higher I'm watching for tomorrow. Before we talk about number two, let's slow down for a second, because I know if you're watching for the first time right now, I know most of you guys watching right now, you guys know these patterns already. You're making money with these already. But if you're watching for the first time right now, this might be way over your head, a brand new strategy. Don't you worry though, I teach this entire system. I teach all of these entry tactics, especially the 21 EMA, in my free trading course. In fact, guys, the markets are way too good right now not to be making money with this. So what I'll do is I'll put a link up top here for you, upper right hand corner. Hit that link that popped up there and take my free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that literally tells me exactly where the winning trades are going to be each day. More importantly though, let's face it, we make our money by timing good entries. So I want to teach you my 4 favorite entry setups in that short short video course. You're going to love all the trade examples I include there. Guys, if you're still missing the best entries right now, if you've lost your confidence in your current strategy, don't wait any longer. Hit that link that popped up there. You're going to love that trading course. The best part is it's completely free for you. A ton of trade examples included in that short video course. Be aware too, guys, I'm going to put all the important links you'll need to learn the strategy, learn how I time winning entries, join our trade room. I'll put all the important links below this video in the description of the YouTube video. Definitely start first on the free video course. Everyone loves that free video class. Help you time better entries, get your confidence back in your trading once again. Don't forget too, guys, we trade together every morning, 8 o'clock Eastern time in our trade room each morning. I'll put that link below. If you're on Twitter or the X platform as they call it these days, if you're on X, I post a ton of videos and charts during the day in between these YouTube videos on the X platform. Give me a follow. Again, all the details you need to learn the roadmap, hopefully earn a lot more for it, are linked below the video tonight here on the description. Okay, where did we leave off? Yes, I do want to talk about if we go lower here. I will cover that in a moment here on the Nasdaq, because again, we get that BLS report tomorrow morning, and I do not want to forget. This could go up and get crushed right back down again, because again, that breakout pullback zone down there is begging to get hit right now. And remember what happened on Friday, right? Big move up, all the way back down again, all the way where? All the way to that breakout pullback zone we talked about in last Thursday night's video newsletter. So don't go clicking off of me just yet. There's a lot more coming here on this video. Now, oftentimes during this rotation going higher, I mentioned earlier that one of my favorite trades going higher here is that separation trade, right? It separates off that 21 EMA. But you know what though? Sometimes we don't get that pullback. Sometimes what happens is it keeps on grinding and it keeps on grinding going higher. Sometimes we don't get any pullback for that. So what do we do in that situation? Well, grinding markets. Remember this, anytime markets grind higher, it creates a lot of momentum, all right? So grinding markets, in my trade room, we always say grinding markets are tough to stop. So knowing that, I can be a little bit more aggressive on a grinding market. What I mean by that is I can mark a trend line now off the highs of that move, bring that trend line down around these major lows, right? That will create a channel. Now, here's where the magic happens. Once I find my channel, now I don't want to buy high, I want to buy low. And to do that, I now look left and I find some of these prior swings, all these prior swing lows like this, okay? Now, the goal is to combine a prior swing low along with the low of that channel. Now, again, how do we time the entries? I'm glad you asked, because this is where the 21 EMA, once again, can make us some easy money. As we pull back below that 21 EMA, this again will feel like a reversal. And once I see bears coming in and trying to short this thing below that 21 EMA, again, now I know where their stops are. Now I know where those sellers turn into buyers, right? When they get stopped on this. Now, very important, pay attention. Once I get that bear trap, that 2-try bear trap below that moving average, now remember, the breakout leg is always the measuring leg. Now on this one, it's the pop leg, right? It's that initial pop out of that trading range. That is our measuring leg. So once we know how big that leg is, and again, I don't know how big it will be tomorrow, but that's the technique I'm going to use. Once I know how big that breakout leg is, then I can match it up there at that low, okay? So breakout leg, the pop leg, combine that with that low. Guys, if you want to make more money, get better at holding on to your winners, right? Let your winners run. And one of the easiest ways to let your winners run is to have a game plan of where this market wants to go. The breakout leg is the measuring leg. And again, think about that bear trap below that 21 EMA. We call these a pop and grind breakout or a pop and grind channel, one of our favorites in our trade room. And what might be my favorite trade going higher for tomorrow will be, what if we popped up and went into another trading range? Now remind me again, what happens with a new range like this? Ranges, they love to rotate, right? They love to rotate below that range, back above the range, or like we're seeing today, they'll go above the range, rotate roughly the amount below that range that we're seeing right now, right? That range right there, we go up, we rotate lower. And any surprise here? Is there any surprise? Look right there, right? They complete their pendulum swing off of the high, they run lower. We're not trying to blindly buy that pullback. What do? We wait for price to pop up. There's bears once, there's bears twice, and now we're looking for that same two-try bear trap as it rotates up off of that low. So think about what's happening right now, and let's think about now, what if we were to run higher here overnight? We might wind up going sideways in a new range ahead of that BLS report tomorrow morning. So we know that we want to rotate off that low and rotate back higher, right? The amount below, the amount above, or vice versa. Like we saw here today, the amount above, the amount below. Now remember too, anytime we see a range breakout, we know that this area now is a breakout pullback. So this is really the easiest way to make money tomorrow. We go up into a trading range. That new range acts as a magnet. The previous range now is our breakout pullback. And again, it could go higher first and then back down, but the goal is very simple. Get underneath that trading range, ideally around some of these prior highs off that trading range there. Let that 21 EMA came over, right? And just as we saw this afternoon, right? I'm not going to blindly buy into that area because I'll tell you right now, this may get crushed and run all the way back down. I'm not going to blindly buy in front of that freight train. What I will do though is once they pull back though, now let's see its sellers, right? Let's see if you have what it takes to reverse this thing all the way back down again. We're overall bullish on the hourly time frame, so I'm not trying to sell that, right? My filter, my directional bias is bullish. So once those bears get trapped in, we then use that one try, two try bear trap. We squeeze those stops. We look for that add-on trade, that separation trade, right? That shallow pullback, that higher high. Again, I can't emphasize enough how valuable it is when price separates off that 21 EMA. Separation equals strength. And we're looking for, again, in my trade room, we call this a bear trap, two-try bear trap, an add-on to our winner. And again, you know where the market wants to go now. You know it wants to take out that pendulum swing on the other high. That's a very easy way to use the 21 EMA to trap traders and make some money. And again, the same thing goes like we saw today, right? It may go into a range, it may go higher first, then back down and then come back here, right? So keep it in mind tomorrow here, if we do wind up into a range and we go higher first and then get cracked back down again, remember, it's not a reversal. It's simply a range rotation. So the amount from above, project that down below. Do not let that fool you. That will feel very uncomfortable. Remember though, the more uncomfortable it is, the bigger the paycheck is when it comes to trading. So it runs lower, same thing. Bears once, bears twice, squeeze those stops, add more as it rotates higher. A lot of examples of these, lot of examples of this sequence inside that free video course I mentioned earlier. All right, now I want to talk about going lower here, right? Because again, we could easily run ourselves up and then a huge revision off that BLS report tomorrow morning. It may get crushed and run back down again. Let's go grab the Nasdaq right now. Nasdaq's getting a bit lonely over here right now. On the Nasdaq here, remember, first things first here, they're very similar, right? First things first, we can easily see we're bullish overall. It's very important that, especially for the new folks watching here right now, remember this. The hourly time frame, the 60-minute time frame gives us the overall direction. I'm a day trader, right? I use this for my direction. I don't use daily charts, 4-hour time frames. I'm a short-term trader. This is the highest time frame that I use. Remember though, the tick charts are used for entries, right? So if we see a strong run down tomorrow, that does not change this direction. So it's very important to keep it in mind, right? As things get wild on the tick charts, don't lose sight of the best direction on the hourly chart. Now, speaking of tick charts, before we dive into those, if you're enjoying tonight's video, please help me grow this channel by hitting that like button. Make sure you subscribe. I know we're all busy people these days. Kids went back to school, so life's busy right now. I get that. I appreciate you guys all tuning in and watching my videos. So as always, guys, thanks so much for the likes, all the subs, all the ongoing support, all the love I get in the comment section below. Thank you guys for tuning in and watching here every evening on these videos. Now, I'm done begging for likes here right now. Let's now dive into our tick charts here. Now, on these tick charts, again, like I said, don't let the wild stuff on the faster time frames, don't let that talk you out of trades that go with the overall time frame on the hourly time frame. Look at that big clue up, right? Big move up, big move down. Again, both of those levels, they're big time bullseyes, right? They're big time psychological bullseyes. Now, again, right now, it seems like that bullseye at 505, it seems like that is a bit unrealistic. I would agree. But again, tomorrow we have a huge number coming out tomorrow. That BLS report, the annual revisions, the last time we heard it, it was like almost 1 million jobs got wiped off, right? It really made us second guess the validity of all the data we've been getting during the Biden administration, but I digress. That's a topic for another discussion. So we know these levels are big time psychological levels. Look at the range below us. I'll tell you right now, if there is a trading god washing down on us right now, please, 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 tomorrow, please, let's pull back to that breakout pullback. So it's begging, it's lonely over there, right? You can see how lonely it is. And remember, if you guys tuned in last week, this should come as no surprise. Look what happened last week, right? We mentioned this course last week, right? Had that breakout, that big run higher. Is anybody surprised? We went all the way up, all the way back down, and now, no, right? This is a classic breakout pullback. Of course, it was a bit overdone. It was a buy the rumor, sell the news environment. We talked about that late last week. Okay, so breakout pullbacks, remember, it's not an if. It's not an if it will. It's a when. It's almost a guarantee we're going to get a breakout pullback. The only question is when will it happen, right? That's the big question right now. So breakout pullback zone is right there. And then finally is this range right here. And by now, you know how ranges work, right? They go up, they rotate down, the amount above, the amount below. So where is this market now trying to go? It's trying to rotate off that low. And just like we saw earlier on the S&P chart, as we're going higher, I'm looking for that separation away from that moving average. We're going to use that, what is basically a technical bear trap like I teach in our free video course. We're going to use that now for initial entry. We're going to use that breakout leg, measured leg to find our targets. We're going to use that two-legged pullback for a breakout pullback off that trading range. It is all the same stuff we just talked about over on the S&P, right? It's that pop up, that grinding, finding that new channel, buying below prior swings for the first test is the best test, or my favorite is always a pop up into a new trading range. We call these stacked ranges in our video classes. We got one range up top, we got one range below. We use the previous range for a breakout pullback. We use the current range or the most recent range for our pendulum swing, going higher, rinse and repeat. Very easy way to use 21 EMA if we go higher. But what if we go lower here? Like I said earlier, I love the idea of going lower here right now. Now, I want to talk about, because there's kind of a big difference between, do we go lower on the breakout pullback zone, Or do we really go lower all the way to that big bullseye level down at the 05? And again, this will also apply seamlessly to the S&P as well, right? So these are all very interchangeable here on the S&P. So first things first here, if all we get is a strong run down into this breakout pullback zone, that's not a lot of momentum for the sellers. So a very simple bear trap and add-on, right? So bear trap once, higher high, twice. Remember, you got to have a higher high on that. You always want a higher high because sellers want to sell, or sellers want to sell high, right? By definition, sellers will sell at a higher price. And so you want to get those higher highs there. Once those bears try twice, now we buy into those stop losses. And again, we're looking for basically rotation, right? We're now looking for that rotation back into that range. And anytime we rotate inside a trading range like that, it's always that separation trade. All right. It's always some variation, at least, of that separation trade. So we go lower, bear trap, add to our winner. And again, the amount below, the amount above. Again, leave a runner, right? Leave a runner. If there's one scenario where you must leave a runner, it's always going to be those rotation trades. Now remember too, is that oftentimes when I go lower here, oftentimes we don't get a bear trap down there. You know, every once in a while, there's so many buyers in these breakout pullback zones, it just whoop and runs right back up again. So if we do see a run going lower, but we don't get a chance to trap those bears in and it V bottoms off of that low, you see, V bottoms are just like that grinding move I mentioned earlier. If it V bottoms off of that low, it will almost always begin to start grinding, going higher. Now, this is where some discipline comes in handy because if it pops up like that, that voice in your head is going to encourage you to chase after that move. Believe me, I'm sure, I can't imagine I'm the only person that's had that problem before, but I don't want to chase after that. I want to buy nice and low. To do that, we connect off the highs. We find that channel off the low. And the most important part about this is I want to try to combine one of those prior swings with the first touch of the low of that channel. Now, in all reality, the entry pattern on this, the entry technique on this could be a 2-try bear trap. It could be an add-on trade, a pullback combination, a strength trade as it rotates higher. Any of the entry patterns you guys are learning in our free video classes can be applied to the first test off the low of that channel. So be aware of that. Now, hold on one second though. What if we were to really get a really strong run down, right? Like what if, something comes out tomorrow morning, the BLS reports, and this thing just takes a bloodbath and runs lower. What's the problem on this? The problem is that all of that momentum is going to want to pull back, retest that low before we resume the overall trend. Does that make sense? So again, a relatively shallow pullback, I can be somewhat aggressive, right, on that bear trap. But a really strong run, and I assume this will be somewhere around that BLS report tomorrow, I got to be careful because a typical bear trap where the bears try once, the bears try twice, if I'm buying as it goes higher, a lot of times that becomes a bull trap. And we wind up running lower, stopping myself out, right? Losing money, and then it goes without me. So this can be a very trappy scenario. Again, as soon as this will come around the BLS report tomorrow morning. So if we see a very strong run down, I'm going to make a small adjustment on the entry tactic. It'll be a bit more cautious. What I'll do is I'm going to wait for one try. I'm going to look for 2 tries. But on the entry on this, very important, I need to get in below a prior swing. And on these types of trades, I'm going to take a very quick first target, remove that risk, get that stop up to my point of entry, because again, I want to have risk off. I want to lock up a small reward before those sellers get their hands on this for a run going back down again. Now, if they can retest the low, now I can be a lot more aggressive now, right? Now what I can do is look for the same basic stuff again, but the same basic 1, 2. On a retest trade though, I can be a whole lot more aggressive. Trap the bears in, get them trying twice, and buy right into those stop losses. It's very important that you see the difference here, right? One of them, the first one, the initial move down is a bit more cautious. Because again, all that momentum will want to retest that low. I know you've been in that situation before. Once they retest the low now, now it's mission accomplished. Now anybody who sells up here, they're taking their profit targets down here, right? Sellers up here become buyers down here. So the retest trade is a great trade. We call these double bottom retests in our trade room. It's basically a retest of the initial move down. They retest that low. We bear trap them in. And as always, we look for that separation, that higher high in price, that separation trade, these add-on trades. I'll tell you, one of the easiest ways to make more money in trading is when you get a nice little bear trap, working your way through higher here, keep adding to that winner, and we know that range up top there, that becomes our magnet. All right, guys, that's my game plan for tomorrow. We know we're going to probably get some volatility when that BLS report tomorrow, so don't forget tomorrow morning, 8 o'clock Eastern time, the place to do it with us is in our trade room. Guys, I can't think of any better way to learn this stuff than to do it with me, learn along, trade along every morning in the members room, 8 o'clock Eastern time. I'm going to put all the important links you'll need below the description of the video here tonight. Start first on that free video course. You're going to love all those trade examples I share there. Then come join the trade room and we'll do it together. In the meantime, guys, be well out there. Be nice to each other, will you? Make a bunch of money for me tomorrow morning. And as always, be here next time. Adios, amigos. Bye for now.